We're looking at the top 6 uranium exposed companies on the ASX because uranium companies have been for a run lately, and we want to see which companies are leading and what's happening in the whole thematic, both domestically and internationally. I'm Christopher Hall, and this is Finer Market Points, where we connect the leading market themes and the top performing companies for better trading. With any commodity, we want to start off and understand what's happening in the spot market, the physical market, to get an idea of what's pushing and pulling. We can see that uranium's been making higher lows. There's a low back here in July last year, a higher low December 22. Again, April, March, April, May, sort of trawling out a bit of a bottom there. And then we've had a higher low in July. It's what's happened from the July period to where we are today that's caught the most interest. And what we're going to see is some have broken out. That's a Sprott Physical Uranium Trust. We also want to have a look at the Uranium Miners ETF, because that gives us a good idea of what the market's seeing for the uranium companies across the globe. And we're going to see there's a fair few uranium ETFs. What we want to do is also delve into URNM. Here it is, Sprott Miners, Uranium Miners ETF. This is more of the larger cap ones, but we're still seeing not necessarily higher lows, but lower volatility contractions. Each pullback is getting smaller and smaller. Those who are familiar with volatility contraction patterns can see this sort of trawling out a bit of a bottom. Each compression is getting smaller in height. And then also, so we'll sort of look at, this one helps, date and price range. So you're seeing a compression here, another compression from high down to low, and another compression high to low. What we're seeing is they're getting smaller and shorter. So percentage-wise, 42%, 26, 25, 12%, 55 days, 69 bars, 28 bars, 17 bars, and then this compression here under that high. That's really critical. So we're seeing this coiling up here, and that's really where we got the interest coming in from uranium. At the same time, we were surfacing the launch pad as showing that uranium companies were creeping up and there was a coiling happening within that whole space. That's physical uranium. That's the uranium miners. To understand what's within the uranium miners, we go in and have a look and see that there's a huge exposure to Canada. Second place is Australia, Kazakhstan, United States, United Kingdom, Hong Kong. So where is this exposure coming from? Well, when we move on down, we can see Cameco is the largest, massive 17% weighting in this ETF. Cameco are the leader. And when you want to be trading, when we look at trading uranium prices, we take the advice from the CFO of Cameco. There's a great interview where he talks about the importance of the term market as opposed to using the spot pricing in uranium. And that's really critical for understanding what's driving all of these companies here, especially when the spot price is moving and these companies or the share prices are not. But while we're in here, we want to see whether Australian companies are the ASX listed. We've got Paladin here, Boss Energy, Deep Yellow, all familiar names for commodity traders or uranium traders on the ASX. Lotus Resources, Bannerman, and then we move on a little bit further down. We've got Aura Energy, Alligator Energy, so AEE, AGE, Peninsula Energy. This is where we're starting to make up the exposures, the weightings to Australia. Elevate Uranium, and they're going to move it down a little bit further, Toro Energy, which has a little bit more weighting in the ETF than cash itself. Cash down here at 12. For the huge weightings, we've got Canada. So you can see lots of Canadian companies here. And that makes up this weighting. When we move back in for the Australian market, while we do see that a lot of the mining companies here we're going to look at are large in the global scale and in those ETFs, what we're going to see is that the global miners, the URNJ, here we go, the junior uranium miners, more recent ETF, but what we have seen is a tighter correlation to the Aussie market and the Aussie miners in this exposure here. Lastly, we're just going to go, before we get into the ASX leaders, we're going to have a look at Cameco, because this is an amazing chart. Bring this out, we're still on the daily, but we're seeing that it had its rally that we're all familiar with. We all traded throughout that period and watched uranium run. Then we've seen it compress, had its high, and then it's worked down under this trend line. Each high has been consecutively lower. And then what happened is we started to have higher lows, compressing and coiling. And then as you can see here with this blue arc, we're seeing a volatility contraction pattern. And the final contraction is most critical in this little parallel channel here, where it compresses under the recent high, and then you do see volume dry up. So again, really light volume in this compression, light pullback, And then you do see a good volume jump in here with an early entry and then a confirmation of the breakout here above the B wave, what Gary Glover calls it, and above the recent swing high over here as well, pushing out. We did see a bit of a spring and a retest from a Wyckoff perspective, sitting onto this support. So the compression came back onto the previous high. And then what we're seeing here is these bars here trying to get under that swing low and unable to close lower, and then moving up, even with lower volume, was able to move up. So that's showing it's being able to move off those lows and up, off it's gone. This is a great chart and a great leading indicator. And now we're going to move into the Aussie to see where the top 6 are. So starting off at 6th place, we're going to have Lotus. So we'll load in Lotus, bring up that chart. Excuse me. We've got a volatility contraction pattern here. Once again, these blue lines showing the compressions and then coiling up here with really low volume changing hands. In this pullback here, no volume happening. So no volume in the pullback throughout that mid part of July, and then off it goes. They're in 6th place and they've gained 9% over the month, but this is not telling the story and the opportunity within this compression and the coil. 5th place, moving into Nexgenenergy. Much lower trading from a liquidity perspective, but we're seeing that rally moving up, April lows and then pushing up higher and still breaking over these recent highs and this compression period throughout the last 12 months. They're in 5th place with 10% rally, just being pipped out by Devex. So we'll put a ticker in here, load up the charts. We've got Devex Resources at 10.7%. Similar thing, we've been having this trawling out bottom, low volume changing hands here at lows, selling exhausted, retesting the lows, but not quite getting there. Throwing back, the volume in this pullback here is quite light, but then a bit of change of hands here, increasing in volume. There's Devex, but we're going to move into top 3. Bannerman, which is a name we remember from seeing over here in the larger uranium companies. Let's find Bannerman, here it is, with a 1% weighting into the ETF. And we see Bannerman's put on 12%. This is from trading opportunities, 0, 1, 2, 3 bottoms. This failed, broke back down, compressed, and then trawled out a bit of a bottom here, really trawling out. But what we saw is once it broke out over support, let's zoom in here, big washout lows, big volume on the low, retesting, washout volume, reversal from a spring perspective, Wyckoff spring. So whether you're going to be using these levels here, and the bodies, inability to close lower, came back up on the next day with lower volume, gapped back up, didn't go too far, retested these same lows here. What we're looking at is high volume bars here, selling, closing down in the lows, closed right on the low, and then the very next day, gaps up on the open, opens at most of the height of the range, well above it, above the spring level, and then just rallies all day long, closing right up near the highs with a huge volume. That's a huge reversal from a Wyckoff perspective and really critical coming down to retest this spring level. That's the first point, goes in for a rally. Then this channel in this period here, we're seeing the volumes dry up dramatically into this coil period where it's going to see tight congestion, really tight closes in the same price action, low volume. That's where we're looking for a trade here. So that's what this green and red is showing us. That's where we started looking for a trade in Bannerman, and then it has congested a bit sideways, big throwback day here. That's a shakeout, but quickly reverses and off it goes. That's Bannerman in with 12% gain for the month. But now we're into deep yellow for 2nd place, DYL. Looking for deep yellow, similar sort of thing. Highs coming back down, trawling out a bottom. This is where we're looking for a cup and handle. Bit of a VCP. Try to see a handle in here. You can see the blue arc on this one, but then fails. Still remaining within this channel though. So as that's drifting down, the volume's getting lighter, and then trying to sit back into sort of previous highs. Bounces off this high with very low volume, coming out to be sold down very low. Volumes peaks, really lifts up here significantly. So the highest for a long time, sort of 10, 15 sessions. Closes right on the lows, terrible signal, and then quickly reverses. High volume, completely jumps out above the range, opens higher, trades it, closes at the highs with good volume. That's showing the reversal. When we're seeing the confluence of all of these things happening at the same time with other uranium companies, and also looking at similar movements with the ETFs on other international markets, we're seeing that buying support's coming in internationally for uranium. And that's really where we do see the best opportunities from a commodity perspective when these really start to run. The last one, the best performer, we're going to have a look at EL8. That name is familiar again from that same ETFs that we've been looking at, the spot uranium miners, the constituents. But what we're seeing here is a lower share price. So coming from 30 cents, 39 cents where it's been trading up until yesterday's close, really trolling out the bottom. But look at this, the interest is coming in here. So washout low, high volume. We're going to see, get those volume bars away. So washout lows, this lowest day, not the highest volume, closes on the lows and then quickly gaps back up, showing that there is some good support happening in here in the uranium space. This is back in June. Trolls out after a bit of a rally, coming down and rounding out a bit of a bottom, unable to close lower. Look at all those coiling of those closes right next to each other. In the grand scheme of things in this volatility, that's a really tight range for over a month. Volume gets super low, just really dries up, barely any trading. And then we start to see some positive movements. The first real signal here is closing above this compression period with good volume after some solid volume day breakouts. So that's where we look at the importance of the theme. And this was all in the launch pad, where in the last month, uranium, or up until the last week where they broke out, uranium had been ranking really highly from a launch pad perspective as an opportunity. So they're the top 6 uranium mining, uranium exposed companies on the ASX. A bit of context for how do we look at the international markets, whether there's demand coming from, whether it's Canada, other markets, ETFs, physical uranium trust. It's harder to tell with the term market, but that's a great interview to look at the CFO from Cameco and how he describes the importance of it, where for about the last 4 or 5 years, they were about 50% of the spot market trading. So if anyone knows how to trade the spot market of uranium, we think it would be Cameco. And that's where we're going to leave it out for the uranium leaders on ASX for the 15th of August, 2023.